Hi, everyone. I'm going to give a little bit of time for people to log on and share this real fast. We are going to talk today about how to prepare yourself to buy a home if you were thinking about it. So give me 1 second and share this real fast. Sorry. All right. Thank you for holding with me. All right, so today I have Julie here with me.
Hi, everybody.
Is with Paramount Mortgage, and she is going to talk to us about just steps you guys can take to prepare yourselves if you guys are thinking about buying a house anytime in the future, if you want to know what you need to do, and maybe, if you aren't, to think about the affordability of being able to buy a house versus renting, especially today as rent just keeps going up. So Julie's going to just kind of give us some steps to start preparing ourselves.
Yes. So the first thing I thought of when we talked about this topic, what can I do to prepare for a purchase of a home? I think a lot of renters tend to be hesitant because it's the unknown. But really, when you think about it, it's the same scenario. You're making a monthly payment. You are also paying utilities on top of it, except it's even better because you have ownership when you go from renting to owning. You have stability of knowing that your payment's not going to increase. If your rent's going to increase, you are typically going to get into some sort of fixed payment. And even with adjustable mortgages, they're fixed for a period of time. You have a good investment that you're starting here. That's your investment. And it is like a savings account. The more you pay in it, the more equity you get out of it in the end. And it's something that most everybody can do. Depending on your income, everyone can do it. So I like this topic because it's very easy and lighthearted, and it's not as complicated, and it starts to get people more relaxed. So I would say off the top of my head, the first thing is credit. Credit is big. Credit is going to determine what kind of mortgage we're going to put you in and what kind of rate you'll get on your mortgage. So what you could do up front is start establishing credit. If you don't have credit, you can do a little research, find a credit card company that works for you. Don't go out and open 10 of them, but open a couple credit lines, put something small on there monthly, maybe gas or groceries, something you can pay off and start building that healthy revolving credit. If you don't have credit, that's okay. We could look at building it, whether you're paying rent, utilities, phone bill, and things like that. So there are some creative things we can do to help establish that. The other aspect of credit is some people will say, well, my credit's too bad. But it shouldn't hold you back because there's so many options nowadays to fix credit or to sit down and we can take a look at it and say, okay, let's start moving you in the direction of home buying. I think it's something you should do before you even go out and look at properties because it's something that can put you in a better position in the long run with your mortgage. Mm-hmm. So credit would be the big first step I would take. And there's always a way to fix credit. If it's something that's above what we can handle, we have people that we can refer you to and get you back on track.
All right. Thank you. That's a great first step. And, I know that Julie has worked with a client of my mom's, and it took a few months. My mom had her open house, but she did what she needed to do, and she closed on a house a few months ago now. Yeah. So it really does work. And you can improve your credit quicker than you think when you start taking those steps, but you do have to know what steps to take. So it's important to talk with someone who knows what they're doing.
Definitely. The next step I would say is to start saving. And really it can be a unique thing where you say, this is what house payment I'm comfortable with, and start taking that chunk of money out of your income and setting it aside. So not only are you preparing yourself with a house payment, you are putting money aside, you are preparing yourself for a down payment, for closing costs, but also for cushion for unforeseeable expenses. Everyone off the bat thinks, oh, I'm going to need a down payment, I'm going to have to cover closing costs, but really you want to make sure you're not draining yourself to, if you get into a house and you never know what's going to happen. Quirky things happen all the time when you get into a home, and, we just bought a home and there are things that are not working, or, one of the windows broke, and so you want to be able to have that little unforeseeable cushion there. And it also looks good on your mortgage too. It says that you're taking the steps to be financially responsible with your money, and that it's also at the same time preparing you for that payment. So you kind of get used to it. If you don't pay rent, you take that income, you set it aside, you put it in an account, maybe you can earn interest on it. So that's a win-win situation. And then it really gets you comfortable with what you're going to have to put down. So,
and if you are able to save for your closing costs, it can make you a very strong buyer. And we are in a competitive market, so it can really be helpful in some other ways too.
Yes. And then the next thing I would think of is really the next step, or, you know, any step in between those would be talking with a lender. You really want to find someone who's looking out for your best interest and not their best interest, because this is your investment, and that's truly what it is. It's a great investment. You're the one making the payments. It'll be your home that you live in. You want to take the time and find a place that's going to be comfortable for you, or what your future is, whether it's short-term or long-term in this place. You want to find someone who's going to show you the ropes, to sit down and go over mortgage products that will work for you and get you comfortable with whether it's a large or small down payment, a house payment, what also goes along with the house payment, your taxes and insurance you'll have to pay on a property, or association dues that you have to get used to having as well, depending on where you buy, and really somebody who's going to be looking out for your best interest. And that way, you know what payment you're comfortable with. You can go out, you can start looking, and you're comfortable looking at houses in a price range that you know.
And this is so important, because if you call a lender or maybe fill out something online, a lot of lenders have a pre-approval you can do on their websites. You might be able to find what you can get pre-approved for, but that's not necessarily what you can afford or what you would be comfortable paying. So if you talk to a lender, you can get such a much better idea of what a house payment looks like, including insurance, PMI, anything that you're going to need in that payment. They can show you what it's going to about break down to, and then it'll give you a really good idea of your real price point. Because if you start looking at let's just say 130,000, and really you don't want to be above 115 with the way that breaks down, you're going to be disappointed in the market later. And so it really just, even if you're not ready to, you're still working on your credit, talking through this will get you an idea of what price point you're going to want to be in, or how much maybe you need to save for that down payment. And so there's a lot that lenders can just help you see and give you a good idea of where to be and how long it's going to take you to be ready. Because you don't want to fall in love with a house and not be ready. And you also don't want to fall in love with a house that's out of your price range. For example, if you go on Zillow and you ask what you can afford, it is going to be bad. Zillow will tell you can afford a lot more house than you should. And so you don't want to see that. And that would only be the mortgage payment. They're not including in some other fees that are a part of that. And it's very misleading. So you don't want to think that you need less than what you really do, because it's going to make it really hard as you start looking for houses.
The question I get a lot is, what is the most house I can afford? What's the biggest house I can afford? And I always tell people that I can take you to the edge of the cliff. We can get to the edge of the cliff, but I don't know what honestly you can afford in a whole, because I don't take into account your cell phone bills, how often you go eat out, do you have a membership to a club, are you part of a Y, do you guys like to go out on weekends, how much do you travel? These are all things you want to personally take into consideration when you think of a house payment and what you're ready to get into on a house payment. And yes, Zillow is not a very good start. You can always call a lender. It does not cost money to look at your current situation, work up some numbers, and see what you're comfortable with.
Those are all great points. If anyone has questions, feel free to message us. Why don't you give everyone your phone number in case
My cell phone is 314-497-2165, and you can call me at any time, and I'd be happy to answer any questions.
All right. Well, thank you, everyone. If you know anyone who is this might be useful, feel free to share it with them. Tag them on here. We would love to chat with you guys, help you guys out. Thank you.
Bye-bye.